Welcome back to the Personal Finance Project. Today we're continuing our financial myth-busting series by discussing credit cards. Are credit cards the quickest way to fall into debt? Will not using one hurt your credit score? Are they evil? Can they be helpful? If you have hung around the personal finance space for more than 5 minutes, you've probably heard many competing narratives. So, Greg, credit cards, friend or foe?
Credit cards as a financial instrument fall into one of those unfortunate camps where they can be needlessly polarizing, and you can see this debate raging on the rent versus buy question or the passive versus active question. So there's a lot of questions in personal finance where I think some nuance is appreciated. And so even though I'm not sure we have a real myth here, I think one of the more pervasive myths in this kind of space is there's one on both sides. One is you have your purists who say they want to make the credit card the cigarette of the personal finance, kind of space. They think it is never helpful. They think that it is just a gateway drug to, crushing debt. And then you have the other side of the argument that says, well, if you really want to get fancy with this, you can use these credit cards and all the various benefits and points, things to accrue some wealth. And I think what Scott and I are going to try to do is throw cold water on both sides of the equation and just try to have a very rational discussion of what the pros and cons of credit card usage might be. Does that make sense?
Yeah,
right?
I think that's a good starting point. I would say that, as somebody who uses a credit card for full disclosure and pays it off at the end of every single month, I think for me it's a little easier to see there can be some benefits here side of it in terms of, especially, one of the first things I think about when opening a credit card is, am I going to pay to use this? In terms of, does this have an annual fee? I think for most people, say you're a little bit younger and you're getting your first credit card, the first thing to look at is, okay, am I going to have to pay $100 or $200 or $300 just to hold this ability to spend some money and not have to pay it off that day? Have a debit from my bank account on the exact day that I make a purchase. I think that as a first kind of entry into credit and having some ability to, not pay things off instantly, a zero fee credit card is probably a pretty good choice.
Yeah. And I think one of the pros is if you are a young person who has never financed a major asset, you've never done a home purchase, you've never done a car purchase, this is kind of your first introduction into the building of credit. So you can build credit a number of ways. So you can pay your bills on time in timely fashion. But if you've never been a bill payer, you're probably entering the world without much credit history. And this is a really low-hanging fruit or very accommodating way to start building a credit history. And I think that the pushback we get from people who are more on the purist side of just using cash as king, there are definitely instances, and I'm guilty of this, and I'm sure you are too, where having the ability to access essentially a very, very short-term interest-free for that term, I don't want this to get confused, because if you don't pay your credit card bill when it's due, you will have some pretty astonishing interest owed. But it's an ability for you to get a very short-term interest-free loan. And I am venturing, because I'm guilty of this, I'm sure you are too, that you've purchased something only because you've had the credit card and you didn't have to pay for it right away in cash. I know I've done it.
Yeah.
And I think that's where people can I think the credit card purists overemphasize or over-index on that part of the credit card usage. They say, well, what you're going to do is you're going to overpay for things because in a bygone era when you had to part with cash, and there's all these really nice, social science studies showing, yeah, you absolutely feel more pain when you part with something in order to get something than when you just swipe plastic. Nothing actually leaves your account. Nothing actually leaves your physical body, because if you're carrying cash, if you're of appropriate vintage to have a couple of Andrew Jacksons in your wallet, there is a pain point there, and that can certainly be a little bit of necessary friction for you not to engage in things that just taste or smell like disposable income.
Yeah, and I think from a structural point, I would think looking at credit cards, how do I view this? Because to me as a person who uses them, I really think of it as just an extension of my debit card. I don't think of it as I'm going to swipe this and then think about paying it. It's just I use this to collect some travel points that maybe at some point I'll get a free hotel stay out of it. And I think that if you're going to think about it that way, where, you automatically are going to pay it off. It's not really a consideration like, hey, do I pay some 25 or 30% interest for a little while on this debt? That's a little bit easier to kind of bridge into, yeah, credit cards are okay.
Yeah.
I think what you're talking about, though, is when the payoff is a little bit more speculative. Whether it's, hey, do I have the money in my account? That would be a first question. So do I have the money in my checking account to pay for this thing I just swiped?
Right.
If the answer is no, you're probably migrating into the riskier part of credit cards, because as we've talked about, they can kind of seduce you with these very, very low interest, say 3-month or 6-month teaser rates or intro periods or balance transfers, where you say, all right, I'm going to move $5,000 from a high interest card into this low one, and that's a great savings. Yeah, it might be for a little while, but if you continue to add on to it and continue to think of this as a loan more than something that is really just an accounts payable,
right,
as opposed to anything else. It's not a loan, and it's not something that you should really think about financing. You need to get it paid off, or you're going to very quickly get introduced to those 30% or 25% rates.
Yeah, and I think that, just for a point of clarity, we are 100% absolutely opposed to anyone carrying any kind of credit card balance for basically any period of time.
Yeah.
Outside of some crazy extenuating circumstance where this was literally the only pool of capital they had access to, and they needed to buy medicine for their loved one or something like that.
Is it better than a payday loan?
Yes. Or using a loan shark? Yes, absolutely.
Yeah.
For sure. You don't want to get your legs broken over a little bit of money. So
could it be better than taking an early 401k distribution while you're still working, as an example?
Yeah.
Could be.
Yeah, could be. So there are some uses for the credit card, and I think the purists will say, well, in a bygone era when you didn't have wide adoption of these bits of plastic, say, that allowed anybody immediately to become a viable candidate for whatever product they could get their hands on to a certain limit. Credit cards do come with credit limits, so you can't just go out there and buy, a car on a credit card if you don't have sufficient credit in order to do so. But I definitely appreciate the argument that said previously, if you just didn't have the cash on you, or if it was coming in 2 weeks, you had to wait 2 weeks. And I think that, to your point, we do get paid on rather fixed schedules, but expenses come up in sort of lumpy and unpredictable batches, especially as your life gets more complicated. So you start having children, you start wanting to say fill out a home after you've purchased it. You have all these assets that you might want to acquire, but those tend not to come on a very predictable schedule. And so I think, to your point, and I think maybe to our point as users of credit cards, it certainly allows you to smooth out your consumption over the month and not have to do a big bit of planning to, if you get paid on a monthly basis, or if you get paid on a biweekly basis, or if you work commission and your pay is rather variable. It allows you, to a certain degree, because if you have a variable income, you don't want to load too much onto your credit card in the event that you can't pay it. But it does allow you to have a little bit more of a predictable spend. So groceries are kind of a weekly deal. And I think a credit card makes a whole lot of sense for your goods that you need in order to your consumer goods, because what you pay for that is still fairly predictable. And I get inflation has been a problem lately, and I'm as sensitive to that as anyone. But I do like that, where you can kind of very predictably and reliably pay for the things that you need to pay for on an ongoing basis, and then satisfy that payment when you do have your income come in, because you're really not in control of when you receive your paycheck.
Yeah, I think one thing on that topic that I'll admit that I fall into this a little bit, because I very much do not want to miss a payment. And I also like that smoothing effect. One of the things that you could maybe say is a negative to credit cards is that I think there's a tendency towards, once you set up an automatic payment to avoid ever being late or ever paying interest, you can maybe just be a little bit less strict on your budgeting.
You can be a little less.
Yeah, it's like, okay, well, this month it was $1,000. The next month it's $1,200. And are you really looking at what are the things that are contributing to what is on this card that is getting paid off immediately? So I would say that is maybe a pretty reasonable con.
Yeah, I think the strongest argument against credit cards is exactly that, is because there are behavioral differences between a cash payer who has a zero-based budget every month, where they give every single dollar that they're going to earn in the next 2 weeks or that they've earned that month a name, and they only use those dollars for that specific category. This was popularized by, yet again, Dave Ramsey with his envelope system. A lot of people will be familiar with that. You got your paycheck, you cashed it, you put a certain amount of money into an envelope for rent or your mortgage, your gas, your groceries. And if you had any miscellaneous left over, you filled that envelope with the miscellaneous money and then you spent it. And when it was empty, it was empty. And that would include things like going out, seeing movies, eating at restaurants, that sort of thing. And so now with the ability to finance those with a very short-term zero interest loan, as opposed to having cash in an envelope, which, let's be real, virtually nobody does this anymore.
Yeah.
That can, like you said, it can create some lifestyle creep. And I think that that is something that you need to pay particular attention to if you have long-term saving and investing goals, because this certainly can be an inhibitor to those goals.
Well, and I think it's another big part about this is how much of a budget hawk do you want to be?
Right.
Because I think if you want to, say you have a goal for the FIRE movement, like financial independence, retire early, to retire when you're 45 years old, a little bit of budget creep might move that back 3 or 4 years.
Yeah.
You know, like if you were on a very, very strict budget, kind of that envelope system type schedule, a credit card's probably not a great fit, because that smoothing effect is probably going to create some creep and some money going out the door that you don't have a real good idea of. How am I spending this? Why am I spending this?
Yeah. So I think you need to pay particular attention to how disciplined, as you mentioned before, you're being with those categories of spend, and to make sure that, hey, this miscellaneous bucket is growing faster than my income is currently.
Yeah.
And maybe we do need to pare that back a little bit. And there's a ton of budgeting apps out there that'll break down, here's where you spent, here's what you spent it on, and often when I look at it, it just depresses me. But for some people, it can certainly provide some insight that maybe, oh, shoot, that Amazon.com number is way bigger than I anticipated it being, because Amazon, much like all the other businesses out there, they have reduced that friction down to basically a single button, and you can get your good or service delivered to you the next day.
Yeah, and I think another one outside of Amazon, which truly is variable whether you like to think of it that way or not. In your household, maybe it's more of a fixed line item,
sure,
Amazon. But I would say that when you go with the credit card route, stuff like, say you've got a cable bill, and that's one that I actually have because I like my sports on television.
There you go.
Anyway, so you've got a cable bill and you run out of your promotional schedule. You got a year at a certain price and then it immediately kicks up. You've got that credit card and you just keep paying it off.
Yep.
And you don't even notice. So I think there is a little bit of an ability for when you aggregate to lose efficiency in kicking the tires on what these expenses are and if they're worth actually keeping.
Yeah. And again, I think that cash-based, zero-based budget, that's going to make you you're going to be very diligent with your budget because you're going to have to be. And credit card creep, that's a real thing. And again, I just don't want to overemphasize the degree to which people yes, people have gotten themselves in real debt and real trouble by credit card creep. That's for sure. And there's some fairly lenient standards with who can apply for and be given a fairly substantial sum of credit on these credit cards. So I think that there are dangers there, but if used responsibly and used in a disciplined fashion, they do allow for that smoothing that you and I kind of both like, where you don't have to come up with the cash every week at the grocery store or every time that a child needs something, I've got to come up with the money in cash.
Yeah.
It's helpful to be able to put that on a credit card as long as we're disciplined enough to track our expenses closely and then pay off the balance every single month. The other pro, before we get to the con, is there is the question of what happens when a credit card number or a debit card number is compromised. And so I read this wonderful book called Scam Me If You Can, where the title sort of gives away the prospect of it. It is actually written by Frank Abagnale. And Frank Abagnale, as most of the listeners will probably have known him, is the star character played by Leonardo DiCaprio in the movie called Catch Me If You Can. And so he was the person who flew on Pan Am. He washed checks. He did all this stuff. He was a superior con man. He did a bunch of this when he was super young. But he spent his time in prison, and now he's actually working either in tangent to the FBI or with his own firm. And what he's doing now is sort of the other side of it, which he's trying to root out kind of scammers and help people not fall victim to these things. Frank Abagnale is 100% opposed to anyone walking around with a debit card, because his point is you are using your direct link to your bank account, where your money is. You were using this out in public at gas stations and grocery stores. Are you nuts? His point is, yes, some of these debit cards do come with consumer protections, whereas if you can prove the fraud, you will get the money back. But his point is, if you've done this purchasing on a credit card, the money hasn't actually left your account yet. Whereas in the process of investigation, if your debit card has been stolen or compromised and they've emptied your bank account, you don't have the money. The bank doesn't immediately just come to you and say, you know what, while we're investigating as to whether or not we think this activity was fraudulent, we're going to go ahead and spot you the money. They don't do that.
Well, and then I think you also have to think about the motivation here. So say your debit card is compromised, you have lost $1,000. The bank, they want to resolve this for you because they want you to stay a client, and they, they don't want to have reports of fraud that are going through the bank. But how motivated are they to get your $1,000 back? If you're using American Express or Visa or MasterCard and somebody fraudulently uses the card, it's their money.
It's on them.
So, I mean, at least for now, they're the ones that are floating that fraudulent charge. So they are extremely motivated to find out what happened, make sure that it's resolved, and make sure that this scammer or this person that's compromised your information is not going to be able to keep doing it.
Right. And to get that card canceled and put a stop pay on the card, immediately send you out a new one so that they can get you back on the dole, so to speak here. But yeah, the in terms of that kind of resolution, because I've had experiences with both, where I've had my credit card compromised a few times. A lot of times it's at gas stations. A lot of times while you're traveling, these things happen. And I'll see a fraudulent charge, like a person bought a plane ticket with mine on Southwest Airlines, as it were, and it was like $650. It's a pretty expensive plane ticket. And I immediately call and I say, hey, this wasn't me. And they do a brief investigation and find out that I'm being truthful, and I don't have to pay it. But I had a coworker who had their bank account compromised, and it wasn't via debit card. It was through a stolen check. They liquidated $5,000. And for some people, $5,000, it's not that big a deal. They're going to live. They're going to be fine. But for the person where they were at in their life, that $5,000 was like 2 months of rent. This was not an insignificant number. And she never got the money back. Never. Because the bank did their investigation and decided, no, we don't think that this was fraudulent. We think that you are trying to defraud us. So she left that bank. And I'm not going to say the bank because I think that would be uncouth, but it was a horrible experience. And I think to your point, when you're working with a really big bank, unless you are like private client tier, the service, admittedly, because these are such large organizations, and I don't mean to throw any one particular bank under the bus, it's just not that great.
Well, I think you got to think about how are these companies getting paid? The credit cards are getting paid per swipe to a degree, when you go out and use that card, and then they're getting paid either the annual fee, if it's maybe a higher tier card, or those credit payments that you're making if you're not paying off the whole balance every month. The bank is getting paid mostly to lend money to people, and so, yeah, they want there to be money in your account so they can make loans in the background, but your checking account is not all that meaningful.
No.
Not to be rude, but in the grand scheme of things, I think that your checking account's balance to their lending ability pales in comparison to what they make by you swiping cards and paying interest on a credit card.
Yeah, and banks are in the unfortunate position where they have a disproportionate share of fraudulent claims being made. I would surmise daily. There's probably a deluge of people calling in daily saying, I've had 500 or 2,000 or whatever amount of money stolen out of my checking account. I think it's fraud. And they have to go through the difficult business of assessing which of these are legitimate claims, which of these are them people trying to pull one over on the bank, because I'm venturing that they have to contend with that kind of stuff all the time. And we ultimately get what we asked for. It's kind of like, well, why can't this process just be super easy? Why don't you just trust me? It's like, it's not that I don't trust you. It's that other people have defrauded our bank many, many times. And so now I'm in the unfortunate position of having to go through this often 30, 60, 90-day investigation, and I can't spot you the money during that time. So that's really, from Frank Abagnale's perspective, the crucial difference is you've outsourced the credit. That's the credit card company's problem. But if your money is out of your account, that's a big problem for some people.
That definitely is.
So do we have any more on our pro/con list that we want to make sure that we get into here?
Let's look.
I think you had briefly mentioned on the travel benefits or the other points that you can accrue as being a regular credit card user. And I think those can be important. And some of the credit card purists or the anti-credit card purists might say, well, no one's ever gotten wealthy with credit card points. And it's like, that's true. This is not a long-term wealth building plan, as no one's ever going to finance their retirement through the steady accumulation of credit card points. And I'd like to point out to people, when you are accumulating credit card points and they have a cash back provision, that is a non-interest bearing cash back account. So that is worse than a checking account. That is a zero yield account. They're not going to give you the money. So my point would be, if you do have a cash back provision, claim it as often as they'll let you claim it, because if
Build
you
it up.
don't build it up, I know it's fun. It's like people have these little goals and they get to 1,000. They're like, I'm going to claim it all at once and I'm at $1,000. It's like, yes, but as a financial advisor, that kind of thing makes my skin crawl, because we're looking at it and saying, even in your savings account, you would have done better. Mildly, slightly, and I get it. It can be kind of like the big tax refund deal. It's forced savings. It's money you can't get your hands on. But zero yield, particularly now where interest rates are, it's like, if you've got a cash back option, either apply it to your balance on your credit card or just take the cash monthly. Like, don't do that thing where you reward yourself at the end of the year with a big cash back from your credit card, unless it brings you a ton of joy.
That's lost 4% to inflation
Exactly.
over the last 11 months.
Where you could have owned a CD during that time and done better. So
Yeah.
that would be one thing. And the other thing would be, don't overemphasize the degree to which you're getting ahead with credit card points. Because here's the deal. It's kind of like it's like the tax write-off podcast we did some time ago, where people will go out and buy a super luxurious vehicle and use it in the course of their business, and they'll take the Section 179 expense where they do 100% depreciation on it, which is, yes, a tax shelter, so to speak. But if you zoom out, they didn't need the G-Wagon. You know what I mean?
Yeah.
So it's like, if you're doing spending that is only purely conspicuous consumption that you didn't otherwise need to spend, and you're justifying that spending, being like, well, this quarter I get 5% back here, so might as well load up. It's like, be cautious in that respect.
Yeah, I would agree with you there.
Yeah, because I think that can lead you to, like you said, very easy to get credit card creep if you are justifying it with, well, I'm making money on this deal. And we're not. All right, that was sort of a con on the other side of a pro. We cover the credit cards, build credit for people who are just entering the workforce. They do provide you some benefits to earn rewards and travel benefits. They provide fairly robust consumer protections against theft and damage on other purchases. And then I think that, I guess, one kind of clever strategy a person might want to consider if they've accumulated some credit card debt is look at your options with balance transfers, because oftentimes, because this game is so lucrative, once you do owe interest on a credit card, other companies will try to essentially buy your debt with offering you a very low interest, sometimes zero interest APR for the first 12 to 18 months on a balance transfer. Now, I will caution this with saying there's generally a balance transfer fee somewhere between 2 and 5% of the amount owed. So that can sometimes, you want to make sure you're doing the math appropriately and don't transfer a big balance only to pay a big fee and actually move yourself backwards. But if you've accrued a substantial amount of credit card debt and a company is going to allow you to do 0% for 18 months, I would at least investigate the terms of that deal.
Yeah, and I mean, here's the thing: is we don't want to be critical if you have some credit card debt.
Oh, no.
You know, we want you to get it paid off as soon as possible and use the most efficient way to do so. I finally remembered what I was thinking about a little bit earlier that's kind of a con, and that is, it's interesting. I think that 20 to 30% of people, if I had to just throw a random statistic out there, think that everybody has credit card debt.
Mm-hmm.
And I hope that one of the things that we're maybe myth busting today is that not everybody does that. You know, maybe 20 to 30% are just very used to carrying a balance on a credit card, but that is not the norm, I would say. And I would say that if you think that that's normal, I would encourage you to take a step back and say, all right, maybe I've just gotten marketing of this way of paying off debts slowly rather than as I make money. That appealed to me. I kind of got in a trap, but let's work on, at least for a little while, taking that more strict budgeting methodology so that we can get you out of that point and then get you to be one of these people that either says, no, I don't want these credit card benefits, or is just using them to get the travel rewards or the cash back or whatever it might be.
Yeah, and I think if you're a disciplined user, you can definitely have some rewards. And if you use it appropriately, those can benefit you financially. We've already warned people against overemphasizing the degree to which they will. But then also to your point, I think Nick Majuli, who writes this blog called Of Dollars and Data, he looked into this credit card deal because you often see this like the state of the American consumer and our finances are a dumpster fire and no one's going to be able to retire. And he just felt like this was not true. You know, he was like, it just seems too dire for this to be the actual situation. So there's a wonderful book written, I think in the 1940s called How to Lie with Statistics. And one of the easiest way to lie with statistics is you take a bunch of data and you find an average. And because oftentimes, particularly with investment returns, the average is not indicative of the expected or the typical. And so Nick felt like that's probably the case with the state of credit card debt in the country, because you read these things where it says, 20 or 30 or 40% of people have this on average, have this.
And delinquencies are at this rate
on
higher
average
than normal.
Right. And so what he discovered was, yes, unfortunately, a disproportionate share of people probably at the lower end of the income spectrum, they account for a huge majority of credit card debt. So it's saying, yeah, your typical credit card user does not carry a balance, but the average balance per credit card user is this scary high number. And the average interest payment being made, because we're taking a big number and just evenly spreading it across all of these people who use credit cards, whether or not they actually carry a balance, that average interest paid or payment being made on a credit card can make the American consumer look like they are a complete, dilettante who doesn't understand how to manage their own finances. But it's not true. And it's kind of like the example we've given several times. You have a stadium full of people and in walks Bill Gates. Well, average net worth has skyrocketed by his presence, but typical net worth has stayed exactly where it was. The median has not moved.
Might have gone up by 2
Yeah, so I think as a pushback, when people cite these scary statistics about what happens to you when you use a credit card, your life immediately falls apart, your wife leaves you, and she takes the dog, I don't think that happens. I think that if you are a more typical user of a credit card, you're doing what we are advocating for here. You are using it as a way to smooth and to make your ongoing consumption a little bit more predictable. You're trying to be fairly diligent about avoiding credit card creep, and you're paying your total balance at the end of the 30-day note every single time.
Yeah, and I think we haven't spent a lot of time on credit and just beyond the actual card, but another potential benefit is having a good credit score can be really helpful to you in other purchases where you actually do want to borrow money.
Yeah.
So either a mortgage or a car. Those are the two things that I actually like borrowing money for the most part. I mean, maybe a boat or something. I don't know, but
maybe a boat.
I don't know. Then you're kind of moving into some lifestyle creep. I'd say there probably if you're financing your boat. But anyway, by having those credit cards and building some credit history, it eventually over time you continue to pay those off. You pay off your rent or your electric bill or your cable bill on a monthly basis. You start to have a little bit better credit rating that opens some doors to you for financing other things that we actually want to borrow money for.
Yeah. And I think just maybe as a closing remark, talking about the myth, I think the myth of credit cards could be two extremes. You can use these and their rewards points as a wealth building tool. I think we've put that to rest. And then the other side is there's absolutely no instances in which a person should ever entertain using a credit card. I think we should put that out to rest. But here in Texas, out in West Texas, we have these freeways and the speed limit is 85. So you can get up to 85 if you're going out to San Antonio. I'm sure you're familiar, 80 or 85 like that. But what you'll notice about the speed limit signs is the speed limit is 85 when it's sunny. It's 85 when it's raining. It's 85 when it's light out. It's 85 at night. It's 85 if there's ice on the road. It's always 85. And so the speed limit is indicating, it's not saying that this is a prescription, like you should always drive 85 miles per hour. It's that this is the fastest that you can legally go under all conditions.
Under the best case of conditions.
Right. Well, yeah, exactly. And so it is you, the driver, who needs to determine, when should I actually drive 85? Should I drive 85 in a dense fog? Probably not. And so I think, like you mentioned when we were doing the 60-40 portfolio myth busting, to thyself be true. If you have spending discipline issues, stay away from casinos and credit cards. Stay away from liquor and leverage. These are basic precepts that everybody can abide by. But this notion that if you are a disciplined spender and you are doing this in a prudent way, that you shouldn't be able to access the rewards and the real benefits of a credit card, I don't think that that's right either.
So going back to what Hannah said at the very beginning, definitely not evil, but there's a way to do yourself harm.
For sure.
Also, definitely not an angel, but a way to do some good.
Absolutely.
This broadcast contains the current opinions of the hosts and are subject to change. The broadcast is provided for informational purposes only and should not be considered investment advice or recommendations. Investors should obtain professional advice before making investment decisions. This is not a complete analysis of every material fact regarding any company, industry, or security. The information has been obtained from sources we consider to be reliable but cannot guarantee their accuracy. Robert W. Baird & Co. Incorporated is not a legal or tax services provider, and you are strongly encouraged to seek the advice of the appropriate professional advisors before taking any action. For more information about any companies discussed, please contact Baird. Past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. An investment cannot be made directly in an index. The broadcast may not be reproduced without express permission of Robert W. Baird & Co. Incorporated.